First of all, Dow Jones Industrial Average daily time frame. We have this trend coming down, making lower high because Fed is now doing QT monetary policy, which is bad for stock market. This is not normal Fed rate hike cycle. It is focus for inflation control. So this upside movement, which we can say bear market rally, and it has retraced of this complete bearish trend. The 50% retracement is done, and if new high comes, then next target will be 61% retracement. So these were our static resistance, and 61 is our key horizontal resistance because this level has been tested many times as a resistance and support level, and this trend line as a dynamic resistance because this retest was clear, but these two are not clear. It sometimes goes outside trend line but came back, and this red candle is below this trend line. So this 61% retracement is our first key upside resistance, but support is new lower low because these stocks will not go up like last time until Fed do rate cut. Then after that QE. When Fed will start QE monetary policy, then we will look for long opportunity in this stocks index. So once this low breaks, because right now it is making a head and shoulder chart pattern, and once this low breaks, then you can expect that bearish trend has been started, and your downside risk is new lower low. And if we focus on this complete trend top to bottom, and if it came down, then our target is new lower low, but we need static support. First it will test this support area 28,000, then you can target 50 and 61% retracement level, or this lower white trend line because it is doing this testing upper and lower trend line as a support and resistance. So this area between 50 and 61% retracement level is our resistance zone. Election is done, and today we have CPI number. So after this resistance level, your next support area are 50 and 61% retracement level for this previous bullish trend. So there is a more focus on Dow Jones because it has bent up more than Nasdaq. And if you see, first it came down making this falling wedge chart pattern, then went up making retracement, but this last leg only retraced 38%. So there is a more selling pressure on Nasdaq. So if it continue its sideways correction, the next upside resistance will be 50% retracement level near 12,000. This will be our first key resistance level. And if this stock index drops after CPI today, and if new low comes, then there is a big downside risk on Nasdaq because it now testing 61% retracement level of this last bullish wave. So after breakout, when new low will come, then we have to target first this previous all-time high, which can be our static support level, then 78% retracement level. But our main target is 100% projection near 8000 level. The wave W retracement wave X and 100% projection for wave Y near 8000 level. So if it drops after CPI, then you have to manage your risk up to that level. If you see monthly time frame of Nasdaq, then this was the bottom in last recession. Since then it is going up, and this was our top after coronavirus bull market, but now they are coming down. And if this entire trend has been ended, which we call globalization, then you can expect there is a more risk to downside, because big company like Meta are going down, because they were going up when Fed was doing new experiment with QE monetary policy, and now they are back with their QT monetary policy. So maybe some company may not survive. That is why Nasdaq is more down compared to Dow Jones. And if we see daily time frame of SP500, then first of all we have this trend line. If new high comes, the first target will be this white trend line, and our first key resistance 43.25, because this was our wave W, then correction X, now we are in wave Y, and you can see it sub wave 135, and this was correction, and this wave Y has made 50% retracement, so it is ready to make a new low. But all of these things depends on CPI, which change the Fed decision in next monetary policy. So first upside resistance is 4000, which is 61% retracement of this last wave, and our trend line as a dynamic resistance. Or if they start coming down on upside surprise on CPI, then first it will break this low, because current bullish price action was started when it made 50% retracement of this last bullish wave. So maybe the seller take profit or some short-term buyer enter. So on breakout of this low, our next target will be 61% retracement level, which is near same price for 100% projection for wave Y. So this area near 3143 is our support zone. So our resistance is 4000 and support is 3200, and between these two level you can expect this is a sideways correction, and this was the bottom of this bullish trend. When this bottom was made, everything was already done. Rate cut by Fed, and main thing was QE monetary policy. This was beginning when that policy was started, and this was second time during coronavirus market crash they started QE again, and it went up. But since this bottom, which was made in 2009 after great recession, Fed now doing QT monetary policy, and which is complete opposite to this last complete bullish trend. So this stock bearish market will not stop and Fed start QE once again. And before that there will be rate cut, and which will take several months, and Fed will not do rate cut until this stock market crash again. So this 61% retracement level for this last bullish wave is our first key support level. When this level break, then we will decide where SP500 will go and what will be Fed monetary policy at that time. So all of this movement of market will decide today after CPI, upside resistance 4000 and downside support 3200.